as markets anticipate, but they are not always right, that the time at which we reach that 2% sustainably has advanced a bit, but it is not yet now, and we will have to wait further in order to make sure that we are at that 2% sustainable medium-term target. Thank you.
Olaf Storbeck of the FT, I see you are back. Floor is yours.
Hello, can you hear me now?
Yes.
Excellent. Yeah, thanks for taking my call, and apologies, kind of double apologies for not being there in person. I would have liked to come, but I couldn't make it.
You would have enjoyed it.
As I'm new to this wonderful world of central banking, I have a probably relatively basic question. In the introductory statement, you referred to this updated assessment of your inflation outlook. Does this refer to the September staff forecast, or has this changed since September within the Governing Council? And if so, could you give us a little bit more color on what the actual change in this inflation outlook has been you're referring to? And my second question is also again to this theme of undershooting the 2% target. I mean, even the September forecast said it's kind of it was projecting at the 1.9% inflationary rate for 2026, and I think from the second or third quarter onwards. Has this been changed, and to which degree do you think it already shows that monetary policy is too tight? Thanks.
Well, thank you for your question. If anything, I would say that what the numbers are showing at the moment is that our monetary policy is working. And the fact that we've managed to bring inflation down as we have so far, not to complete victory, but to have brought it down so much is an indication that our monetary policy is actually working. It's not the only thing that is operating in that respect, but it is certainly part of the elements to explain that we have moved from very high inflation numbers to much lower and hopefully soon to target on a sustainable basis. So our assessment of inflation as we stand now is really based on all the numbers that are available, and that leads us to assess and take a view on inflation now and the potential impact going forward. But that will be done on a strict, rigorous, published way when we have our December projection exercise. And you will be obviously not privy because it will be public, but you will be on the receiving end of those very clear updating. But in the meantime, we are not blind to what happens. And when we receive inflation by way of HICP at 1.7%, when we see core at 2.7, when we see services moving down to 3.9, and when we look at the 3 months over 3 month services moving significantly from August to September, all of that put together leads us to believe that inflation is definitely on that disinflationary track that I was referring to earlier. Forecast. Again, we had a forecast in September. Between September and December, a lot of data, a lot of numbers, a lot of indicators, a lot of surveys will come into play, will be integrated in the work that we do. And we will have a forecast that will be, by the way, extended to 27, because the December forecast always takes one further year into account. And we shall see. We shall see whether there is a move and in which direction in terms of inflation, in terms of activity. But in between projection exercises, as I said, case in point that data matters. We look at everything that we have available, and if it is appropriate to take us closer to this timely reaching of our target of 2% medium-term symmetric, we make the decision as we have today.
And the next question goes to Miha Jenko of the Slovenian daily Delo. Miha, the floor is yours.
Thank you. I would just follow the previous colleague who asked what happened since the September meeting. And my question is, are you in the ECB somehow surprised by so rapid drop of inflation, enabling you actual rate cut which wasn't fully expected or priced in the September? Thank you.
That's a really good question, actually. Thank you. Thank you so much. You know, what is a little bit irritating sometimes is the lapse of time between meetings. And on this occasion, there were only 5 weeks. But in those 5 weeks, we received quite a lot of information, some of it by way of hard numbers, readings that were actually updated, actually downwards a little bit today. Some of it by way of PMIs, which are a bit softer than hard data, but all synchronized and moving in the same direction. So were we surprised? I'm not sure that we had anticipated that 1.7, nor did anyone else for that matter. Because if I look at analysts, if I look at those whose job it is to project as well and to forecast, or markets, I think we were all a little bit surprised by the acceleration that is being demonstrated by that numbers. But it certainly raised our confidence that the disinflationary process is well on track. But having said that, we are data dependent. And that's the beauty of the English language. Data is either singular or plural, but it's the same word. We are not data point dependent. So it's not because inflation came out, HICP, at 1.7 or core at 2.7 that we made that decision. We need an array of information and data. And by the way, we also know, for instance, based on the work that has been done and that was already mentioned during the previous press conference in September on the basis of projection, we know that the next 3 months will not have this linear, low and below target inflation number. We know that it will be higher than that because of obvious base effects that we know of already. And we shouldn't be surprised at that, and we should not be jumping to any kind of conclusions either. Thank you very much.
And the next question goes to Klaus-Heiner Jakisch of HR-ARD, German television.
Good afternoon. Thank you very much for taking my questions. Mrs. President, the first question relates to your statement some months ago when you said and promised the population in the Eurozone to break the neck of inflation. If you look at some of the points which you mentioned, that the fact that inflation is going to rise again, if you look at service sector, at food prices, all the effects which really concern the normal people, would you say that the neck is broken or not? And the second question relates to your interesting speech you held to the Governing Council last night, in which you described the admirable economic development of our host country here. Could you perhaps quickly or briefly summarize again what we actually could learn in other countries from this interesting path here in Slovenia? Thank you.
Thank you so much, and thank you for bringing Slovenia back to the picture, because there is a lot to be learned from Slovenia. So, have we broken the neck of inflation? Not yet. Are we in the process of breaking that neck? Yes. Now, we know, and I was on the market in Ljubljana a couple of days ago to check on prices, because I come to Ljubljana on a regular basis if I can. Food prices are still growing at 2.4% on average in the euro area. And this is not the 2% that we want. We are clearly still above target, and it's one area, together with energy prices, to which consumers are highly sensitive, which has a bearing on what they do, whether they consume, whether they save, which matters a lot. So we are extremely attentive. We know that food prices in particular are very sensitive, and we know that we are not at target yet on that front. But are we breaking the neck of it? Yes, I think so. It's not broken completely yet, but we're getting there. On your second question, I think the key messages that I wanted to make yesterday, using the beautiful example of Slovenia, is that in times of uncertainty, you have two options. You can either resign yourself and suffer, or you can get a grip of yourself and take uncertainty as an opportunity, which is exactly what Slovenia did when it became independent, when it fought inflation, and when it really bounced back in terms of economy. The second lesson, which is interesting, which I mentioned yesterday as well, is that when there is that expansion, when there is prosperity, it needs to be widely shared. And that is particularly the case in times of risk of digital divide. I think it's a very good case in point where digitalization has been widely spread and where the Gini coefficient of Slovenia is in the top 3 of all the OECD countries. So I think the lessons we can learn is that when it's hard, we have to get a grip of ourselves, we have to push for reform, we have to continue to integrate and innovate, and from our perspective as a central bank, if anything, it should push us in the direction of the capital market union, of banking union, and making sure that capital flows and can actually fuel innovation in Europe. Thank you.
The next question goes to Andres Stumpf of Expansión, the Spanish daily.
Thank you. How important was for the decision and the debate the fact that even with the new rate cut, financial conditions will remain restrictive? And the second question, do recent macroeconomic surprises grant a downward revision on growth in December? Thank you.
October is not December. I cannot tell you today what our December outlook will be and what the projections will say. I think we have to be nimble, we have to be attentive to the data that we get and work on the basis of that. On the issue of being restrictive, I made the point, we are restrictive at the moment at current rate. Even with the 25 basis point cuts, we will continue to be restrictive. And we believe that it is necessary and would have to continue to be so until we are confident that we are reaching the 2% target in the medium term. And that will come in due course, but we're not there yet.
And the next question goes to Spela Mikus of Finance, or Finance, Slovenia Daily.
Hi, thank you. You've mentioned you do not foresee recession for the euro area, but at least from Germany, we are getting some worrying data. Is there still a chance that this may turn so that we might see a recession in the euro area? Thank you.
Well, thank you for your question. You know, even with one of the member states, however large it is, facing difficult circumstances on the basis of what they themselves are producing, it does not necessarily imply that the whole of the euro area is going to be affected in the same way. And based on the information that we have at the moment, we do not see a recession in the euro area. Now, of course, we have to be attentive to particular sectors of the economy. And as we stand here in Slovenia, which is a country that participates in the supply chain of the automotive sector in particular, of course, many countries will be paying attention to these sectoral developments. But to your specific question, do we see recession? The answer is no.
And the last question today goes to Fabrizio Goria of the Italian daily Stampa, joining us via video. Fabrizio, please.
Can you hear me?
Yes, very good.
That's perfect. President Lagarde, you talk about fiscal consolidation. Government must steadily reduce deficit and debt and public debt. The IMF said the same thing just a few days ago. What are the risks, the market risk in the event of a failure to consolidate? And the second question is about bank consolidation. There's a huge debate in the Eurozone. Do you see the bank consolidation as an opportunity for the area in order to compete more in the global market? Thank you.
Thank you to you two consolidation questions. Look, on fiscal consolidation, we now have a fiscal governance framework that identifies the right equilibrium and balance between fiscal consolidation that is needed in many countries and the necessary investment into growth-enhancing reforms. And I think it is that balancing act which is the virtue and the value of this revised governance framework for fiscal purposes. It's associated with the time frame of 4 or 7 years, depending on the level and degree of reforms that the member states will propose and will implement. So if those railguards are followed and observed by member states, we believe that it's the right environment within which to develop activity. And from our part, while the fiscal authorities will do what they have to do in fiscal terms, while the authorities will have what they have to do in structural reforms, we will do our part by maintaining price stability. But of course, we are interested in what they do, because everyone has to play their part. Now, on your bank consolidation question, I have said that last time around. I think I forgot whether it was you asking me, but our view is that bank mergers, to the extent that it strengthens the banking system, and on the basis of the cost-benefit analysis that the shareholders and the stakeholders conduct, which is not to say that we are directly involved, other than through the supervision authorities that we apply to the requests and applications that are filed with us. It is for them to decide how to progress those projects. And I'm not referring to any particular project, as you know. Thank you.
That brings our press conference to the end. The next press conference is going to be in Frankfurt on the 12th of December. And up until then, we wish you all the best. Thank you.
All right. There she be. So what do you think? Was that good? Amazing. Okay, if you're using the Squawk, it's totally for free. Please visit and use it. And while you're at it, subscribe and like. Real-time calendar, real-time headlines, real-time technical analysis. Okay, and then even you can check the poll and see how everyone else is trading today. So you can even get some market sentiment out of that. Ooh la la. What's up, fireworks? Taking a look at gold, we're just riding the markets like we should. Making that all-time high. We're back below 2,700, but we're still climbing. Look how beautiful that is, huh? We've been long since the 22nd of July. July? Yeah. July. So we'll see if we can just keep climbing the moving averages. It's looking lovely on the daily chart. So simple. We plan these things 2 and 3 weeks in advance. Having seen how the Europeans now dress at at visiting central banks and being on television, I guess when I'm at the Fed next month, I'm going to wear track pants and a stretched out, faded out Adidas t-shirt.
The major U.S. stock indices are higher, led by the NASDAQ index.
That's almost a crime, huh? Very disrespectful.
The major U.S. stock indices are higher, led by the NASDAQ index, but off early high levels.
Problem is
the
that
major U.S. stock indices are higher, led by the NASDAQ index, but off early high levels.
Ooh, I read it twice. Weird. Problem is I don't have a t-shirt like that. But anyways, I don't think I even have track pants. So anyways, gold doing as it should. Thank you, gold. Much appreciated. Checking out the silver. Okay, made a lower low, trying to get in, force its way back into the range. Doesn't make it an awesome trade, but it is messy. And the worry here is the development of something like a Head and Shoulders, right? I don't think it'll do it, but it's actually a crown. I know, whatever. It's the same. So anyways, that would be the worry. Taking a look at my WTI. Yep. Geopolitical risk being priced out. All over the place, isn't it? Yeah, bloody mess. Well, it's because the recent moves have nothing to do with supply and demand, but instead geopolitical risk. So risk up. Okay, when there's risk, it's up. When that risk diminishes, it's down. Kind of hard to figure all that out. Different ways to slice and dice this. So you want to use TRADARS for that because it doesn't make mistakes. It doesn't get lost in questions like, how do I analyze this? Oh, I think I probably have two versions of this going, so I'll kill that. There we go. Cool. Hey, there's like 60 people here. Can you visit this page and click the like button? Would you do that, please? I also need to get to 500 subscribers to unlock some of the other YouTube features. Yeah, thank you. You can just have it running in your background. What I prefer to do, though, is float it. So I can have it there and listen as I work. Let's go to the stock markets. Okay, seems to be doing all right. Looking at the Dow, we'll have to look at it at a smaller time frame, but we have it going up. Not quite off the pivots, right? So you can see it went up, hit obvious pivots. Some bulls are going to take profit, right? Some bulls are going to take profit. And then other bulls bought the dip. There's no bears. How do I know there's no bears? Type in a question mark if you just simply don't know. Well, I mean by looking at this chart. It helps you shape whether you should be afraid of things or not afraid of things. It helps you put weight. I look at this and like, there's no bears. So it gives me courage. Thank you, Lucas. Bears don't sell higher highs. Bears don't sell higher highs. They sell lower highs. So anyways, that's that. Peace code 9. Okay, so anyways, Dow doing its thing. Nasdaq doing its thing. It's not quite to the resistance yet. Well, Modi, we already did that. Yeah, we already did that. South Africa. I was studying a little bit about Zimbabwe last night, and the busiest border in Africa is between Zimbabwe and South Africa. I bet you the traffic gets crazy there, huh? Zimbabwe, the House of Rocks. Seems like a pretty fascinating land. So watch that climb to its top. And this is the weekly point of view. Well, why would you create a synthetic indice if you can just buy an indice? But on a weekly basis, this is quite clear, right? 6,100 and something. Yeah, same. I mean, like, when you're trading this S&P 500, it's a synthetic derivative. When you're like going back to commodities, this isn't a deliverable, right? There's no underlying asset. This isn't a futures contract on WTI. So it's some synthetic representation of WTI. Sorry, I'm talking behind myself.
Semiconductor sector surges. Microsoft and Apple lead tech rally.
Crude oil dips again after ECB's Lagarde sees more downside risk for Eurozone.
Semiconductor sector surges. Microsoft and Apple lead tech rally.
Cool, right? I can hear it behind me. YouTube is about a couple of seconds slow. So anyways, yeah, all of this is some sort of synthetic derivative of an underlying asset or a synthetic index of an underlying asset. How they actually do it, I don't know. So anyways, that S&P 500 just looks fine. Let's take a look at our yen pairs. Okay. Once you have identified a breach, if you believe it's a lower low, then you need to flip your pivots. No worries, Abdullah. I'll be there for you. These 5 words I swear to you. When you breathe, I want to be the air for you. Oh my God, can you imagine? There's a song that has every cliche all in the one song.
The ECB is behind the curve and oblivious to it.
The ECB is behind the curve and oblivious to it. Wait, that was actually me.
The ECB is behind the curve and oblivious to it.
I'm going to see if I can make those voices louder. So anyways, if you believe we've had a breakdown, then you got to flip your pivots. The interesting, if you look at my book where I talk about the old man easing in a hot bath, it's very much like this. And so let's say there is a breakdown. Then the next one is like this.
Silver price forecast. Silver US dollar consolidates below $32 as investors look for fresh Fed rate cut cues.
I feel like looking at silver for some reason.
Silver price forecast. Silver US dollar consolidates below $32 as investors look for fresh Fed rate cut cues.
Yeah. So we got 32 above us. So we'll see if that's the real top. If it's up, retest up. I mean, come on, dude. This AI is nuts, isn't it? They taught it, Richard, at supermodel school. So I learned how to walk and how to pose. Right? How to hydrate. How to not eat food for 3 days straight without fainting. And they taught us technical analysis. That's how the supermodel do. Pure mathematics says, hey, why gold and silver bullish? Well, it would likely be a level of aggregate demand. Okay. But it probably has more to do with yields falling on the 10-year T-note than the general risk on. Oil price is flat as investors await U.S. data. Oops. Oil price is flat as investors await U.S. data. It's beautiful, isn't it? I mean, I'm telling you, I love this service. It's just giving us headlines as we're trading. You're like, oh yeah, silver. I guess I should go look at silver. Yeah, it's cool, right? Higher high, higher low. It's really boring, very, very basic, very simple day trading. You've seen this 100,000 times. Okay, if it's a higher high, you're obligated to buy a higher low. If you're a bull, if you're not a bull, take a knee, ride it out. Very cool. Let's look at the indices. Yen due for some weakness. It's been on the high zone since the July move. Be interesting that we've pulled all the way back and now, working our way back down to the mean. Kiwi stabilized. And I'm wondering if the next leg is up on China data. And I'm wondering the same for Aussie. Okay, is this the right time to buy? Now, if I felt comfortable with so these are synthetic indices. Actually, they're true indices. But I created these to show you it's like Aussie dollar versus everything. And so if we can get back to a bullish upward move, I'd also want to confirm this at TRADARS.com with seasonality. Okay. So, for example, a year ago, Aussie dollar was falling. So maybe it will continue to fall in the fourth quarter. Maybe that's usual. Okay. Actually, that was years and years ago. Sorry. Anyways. We want to check seasonality. Sorry, that was, I was really zoomed out on that one. So that was back in 2017. But nonetheless, I remember those days trading Aussie short. Oh, so good. So good.
US dollar tries to break hurdle after ECB's Lagarde paints not so positive picture for Eurozone.
Okay, what do you see here? Euro versus everything. Okay. And a retest here, huh? So most likely the probability using technical analysis is it resumes up. Now fundamentally you might think the opposite. Well, that'll be a very interesting price to see what euro versus everything ends up doing. It can confirm or deny your hypotheses. Do you guys spend time on your indice charts? You do? I hope you do. Stingray, I had my previous streaming software was glitchy and it would stop every 4 hours and I'd have to go and reconnect it. And so in the middle of the night, it dropped again. So it was just streaming a blank page. I'm like, WTF. So anyway, so I changed software and got it up and running as quickly as I could. And I don't believe it's streaming at 1080p. I think it's doing 720p. So I need to spend some time with the machine and tinker with it to stream at ideally 4K. That'd be great. But at least 1080p. Pure mathematics says indice charts are a leading indicator. How is that? What do you mean by that? Well, for some of you,
United States NAHB Housing Market Index came in at 43, above forecasts 42 in October.
no,
Nvidia shares break the June high to hit a record.
Where did it go? I lost my YouTube page. Hang on, I'm trying to find my YouTube page. I believe it's here. There you go. For some of those that find it blurry, double check
United States business inventory
this setting.
beats expectations, 0.3% in August.
And I will, and also make sure this is running. If it's not, if the little thing isn't red, then it's not live, it's delayed. United States business inventories meets expectations, 0.3% in August. So anyways, 720p is okay. It's not great, but I will get it to 1080p and hopefully 4K. Yeah. But, you know, for some of you, you might log in and your default setting is auto and it sets you at like 240. And you're like, no. Don't do it, auto.
U.S. August business inventories 0.3% versus 0.3% expected.
U.S. October NAHB home builder sentiment, 43 versus 42 expected.
Richard wants to know how important trade balance is.
U.S. August business inventories 0.3% versus 0.3% expected.
U.S. October NAHB home builder sentiment, 43 versus 42 expected. Okay, what reflects trade balance? We know the most important number in measuring economy is GDP. So of the formula, inside the formula of GDP, what reflects trade balance? Yeah, X minus M. Okay. How much does consumption change the value of the US dollar? Okay. How much does I change the value of the US dollar? Zero. How much does G change the value of the US dollar? Remember, this stuff is a measure of the velocity of a dollar. Yeah. How much does trade balance impact the value of the dollar? Only trade balance impacts the value of a dollar. Only 100%. When we export stuff, okay, X equals dollar up. M equals dollar down. X equals revenue. M is equal to expenses. Okay, you got to look at this like a business. If there was no X minus M, the value of the currency would not change at all. So if you live in a closed economy like South Korea, how much is your inflation? If your economy is GDP, the productivity of the economy is equal to consumption